Hello, everybody. My name is Ronald Kashweka. If you've been following me, then you know that I actually conduct online lessons for cost accounting, management accounting, financial reporting, and financial accounting. Although we also do Pastel and Excel, uh, where Pastel we actually give you Pastel, Sage Pastel version 5.2 to install on your computer for learning purposes. All right, so this is our second video on changes in equity. The first video was an introduction where we introduced changes in equity. We talked about the theory part of changes in equity, but today we are going to practice a question. Okay, so I've actually done something different today, something that I personally myself consider to be special. The reason I'm saying it's special because it will give you an opportunity to actually test yourself to see if our lessons have been beneficial or our lessons on this YouTube channel have actually helped you in any way. Okay, don't forget to like, share, and subscribe. And also, if you're interested to join our online sessions for more in depth explanations, you can simply contact the number that I'll put on my description, and you can also join the WhatsApp group that I'll put on my description. So I've put a test on changes in equity. When you're done with this video, make sure you watch the introduction as well. When you're done with this video, you can click on the link, and then after you click on the link, you will just have to, answer a few questions. It's practically an online equity test. And then when you answer the few questions, it will automatically give you your score. Okay, the test is entirely on equity. All right, perfect. So this is our changes in equity part 2 video. Okay, the last time we talked about changes in equity. So I'll briefly talk about changes in equity. Um, we defined what equity is. We say it is the owner's share of a business or the owner's share value in the business or the part of the business the owner actually owns. Okay, so we talked about share capital. Apart from share capital, we also talked about retained earnings being equity, and we also talked about we practically defined all these. So if you don't understand those particular terms, you can go back to that video, watch it, understand them, and then come to this particular video. We solve this good question together. Okay. All right. So our question is XYZ Limited statement of changes in equity preparation. Okay. XYZ Limited provided the following equity related balances as at 1st January 2024. XYZ Limited provided the following equity related balances as at 1st January 2024. We have share capital here of 500,000 kwacha, which is the owner's share of the business, because we defined this. We have a share premium here, okay, which is more like an add-on on the share capital of 100,000 kwacha, and we have retained earnings, which is the profit that they made in the previous year, but they're bringing it to the current year. We have a revaluation reserve of 50,000 kwacha, so they practically made. According as per their historical data, they made a revaluation and there was a revaluation gain of 50,000 kwacha, which they then added to their revaluation reserve. So the revaluation reserve is now worth 50,000 kwacha, and then we have the capital reserve of 70,000 kwacha. Okay, during the year ended 31st December 2024, the company undertook the following transactions. They issued additional shares amounting to 200,000 kwacha with a share premium of 50,000 kwacha. They declared and paid dividends of 40,000 kwacha to shareholders. They reported a net profit of 180,000 for the year, revalued its land and buildings, increasing the revaluation reserve by 60,000 kwacha, transferred 20,000 from retained earnings to capital reserves. Okay, and then now they're saying prepare the statement of changes in equity for XYZ Limited for the year ended 31st December 2024 in accordance with Zika standards. Okay, so this is our question. This is the question that we want to solve. Yeah, so this is the question that we want to solve today. All right. So if I were you, I'd actually go through the question. This is our question. I don't know if you prefer writing it down or I don't know what method you prefer. If I were you, I would go through the question, understand it. I would pause the video, try to solve it, make my own changes in equity statement, and then when I finish, that's when I'll play the video to actually continue my changes in equity. To practically continue the video so as to see if what I've done is correct or what I've done is wrong. So yeah, if I were you, I would pause, solve, and then later on play to just see. Okay, all right. We can proceed. So right now, what we want to prepare, we see what we want to prepare is a statement of changes in equity. So I remember the last time I made a video on changes in equity, my part one. Apart from defining what changes in equity is, what equity is, I defined what changes in equity is. Changes in equity, we are basically looking at the movement in the value of our capital, the movement in the value of our retained earnings, the movement in the value of our revaluation reserves. We are practically looking at the movement in the value of our equity elements. What are equity elements? Retained earnings, share capital, share premium, revaluations. All those are equity elements. So we are practically basically calculating for the movement or the changes in our equity elements individually. So our changes in equity statement will have our opening balance. It will have our opening balance in that particular equity element, and then afterwards it will have our closing balance. Our closing balance will be based on the transactions that this particular business undertook in the year. Like for instance, if we have retained earnings of 500 kwacha, and then we give dividends of 50 kwacha, meaning our closing retained earnings will be 450 kwacha. But if we have retained earnings of 500 kwacha, we don't give any dividends, but we get profits of 80 kwacha. Yeah, we'll have 580 kwacha as our closing balance for retained earnings. Okay, perfect. Let's do this. All right. What we are going to do is, firstly, I'll put in the details. I'll put in the details, and then I'll list all the equity elements. Note this. I'll put in the details, and then I'll list all the equity elements. As per our question, we notice that we have share capital as an equity element. We also have share premium as an equity element, as a separate equity element. And then we have retained earnings as an equity element. And then we have revaluation reserve as an equity element. Our next equity element is capital reserve. Okay, and then I'll bring in our total here. The total value of our equity elements. Okay, so we have our details right here, which is perfect. We have the details, and then here we have the share capital. Then here we have the share premium, and then we have the retained earnings, and then we have the revaluation reserve, and then we have capital reserve. Okay, so I bet the only thing that I didn't talk about in my last video is the revaluation. Okay, imagine you have an asset, right? You have an asset, you own that asset. Your asset is worth 5,000 kwacha. Okay, you have an asset, that asset is worth 5,000 kwacha. So after a certain period of time, let's say for instance, it's land, your land is worth 5,000 kwacha. After a certain period of time, you actually basically do a comparison between the value of your asset and the current market value of the asset, which is the fair value of the asset. And you find out that there's actually gained in value. And now your asset is no longer 5,000 kwacha, but it's 6,000 kwacha. So basically, you revalue it to 6,000 kwacha because that's the current market value. So that difference, the 1,000 kwacha, is what we call a revaluation gain or a revaluation surplus. So a revaluation surplus or a revaluation gain actually adds to the revaluation reserve. It's a plus on the revaluation reserve. Okay, all right, perfect. So on our details, let me just change all this to money. On our details, obviously we need to start with the opening balance. Okay, obviously we need to start with the opening balance. our opening balance for all these will be as per the question. So the opening balance for share capital, the opening balance for share capital is the opening balance for share capital is as per the question, which is 500, and then the opening balance for share premium is 100. Okay, and then the opening balance for retained earnings is 300. Then the opening balance in our revaluation is 50,000. Then the opening balance in our capital reserve is 70,000. Okay, so basically our total here will be 1,020,000 kwacha. Perfect. So this is the opening balance as at 1st January. You see they're saying related balances as at 1st January. These are opening balances. Okay, now let's see what happened during the year. During the year ended 31st December 2024, the company undertook the following transactions. It issued additional shares amounting to 200,000. So when you issue shares, what happened? When you issue shares, basically you have more share capital. Okay? When you issue shares, it means you have more shareholders, okay, bringing in more share capital. So let's say issuance of shares, or let me say shares issued. Okay, so we issued shares worth 200,000. So we'll add the 200,000 to our share capital because we have an additional number of shares that we have issued for our business. So basically, it increases our share capital. We have new shares that we have sold to the market. Okay, so our share capital will increase by 200,000 kwacha. All right, and then they're saying with a share premium of 50,000 kwacha. So we have an additional share premium of 50,000 kwacha. Which we are supposed to add here on the share premium. Okay, and then declared and paid dividends of 40,000 kwacha. So we declared and we paid dividends of 40,000 kwacha. So we have dividends. We have dividends that we paid of 40,000 kwacha. Where are we going to get our dividends from? From our retained earnings, because these are profits that we are not shared but instead reinvested in the business. So we pay our dividends from our retained earnings. So we remove the 40,000 kwacha from the retained earnings. Okay, and then they are saying reported a net profit of 180,000. So we have a net profit. So a net profit actually increases our retained earnings. So we'll have an extra 180,000 to put here on our retained earnings. And then they're saying revalued its land and buildings, increasing the revaluation reserve by 60,000 kwacha. So we revalued our land and buildings, and then in the process we got a revaluation gain of 60,000 kwacha. So this will increase the revaluation reserve by 60,000 kwacha. And then the question is saying transfer 20,000 kwacha from retained earnings to capital reserves. So we have a transfer that we've made. We've transferred 20,000 kwacha from retained earnings. So we remove 20,000 from retained earnings and we take it to capital reserve. So we have a plus 20,000 kwacha here. Okay, and then our totals will look something like this. Okay, all right. So our totals will look something like this. Okay, and then let me just close this up. So our closing for the year, our closing balance in share capital is 700,000. And if I were to pull this, it will give me all the other balances. Okay, and then here we have 150, we have 420, we have 110, and we have 90. Okay, so basically, we have done our changes in equity statement. It's that simple. Trust me, it's very, very simple. Okay, so let's just quickly go through. Okay, So let's see. They are saying we started with the capital. Okay, we put in the equity elements, the share capital, the share premium, the retained earnings, the revaluation reserve, and the capital reserve. Okay, and I had my total here. And then we had the opening balance as at the 1st of January, which had been used. These are opening balances. And then they're saying during the year ended 31st December 24, the company undertook the following transactions. It issued additional shares of 200,000 kwacha. That's this 200,000 kwacha, which we added to the share capital. And then the shares that were issued had a 50,000 kwacha share premium, which increased the share premium value. And then the other thing they're saying, they declared and paid dividends of 40,000 kwacha to shareholders, which reduced our retained earnings by 40,000 kwacha. And they're saying reported a net profit of 180,000 kwacha for the year, which increased our net profit by 180,000 kwacha. And then they valued this land and buildings, increasing the revaluation reserve by 60,000 kwacha. So we had a revaluation gain or a revaluation surplus, which we added to our revaluation reserve to get the total revaluation reserve. It's more like we had an opening balance for our revaluation reserve because we probably had a past revaluation gain. If we had the loss, we subtract it. Okay. If we had a revaluation loss, we definitely subtract it. But in this case, we have a gain, so we are adding it to the revaluation reserve. Okay, increasing the value of our revaluations. Okay, I'd like to mention something. A revaluation gain is income. If we were to talk about a statement of profit or loss, an income statement, we recognize a revaluation gain as other comprehensive income, thus adding it to the profit. Okay, so it's a plus on the business. It's income. It's other comprehensive income. But in our statement of changes in equity, it basically increases the value of the revaluation reserve. Okay, are you getting my point? Hope you are getting my point and hope you are taking note. Okay, and the other thing that they're saying is transfer 20,000 questions from the retained earnings to the capital reserves. So this is basically an inter-element transfer. They've transferred a certain amount of money, a certain value from the retained earnings to the capital reserve. So it doesn't really change the total equity value. I mean this, but it does change the total element value. Like it changes the capital reserve total value, and it also changes the retained earnings total value in that it reduces the retained earnings. Okay, so for more lessons, for more in-depth, for more explanations in details, you will have to join my sessions, my online sessions. They are very, very affordable. I'll give you a phone number at the bottom that you can simply call for you to join those particular sessions. Okay, so thank you for watching this video. Don't forget to subscribe and don't forget to try out that test. Okay, it will show you how good you are when it comes to changes in equity. And it's a simple test that you can just you can practically just try. Okay, it's a simple test that you can try, and it will highly benefit you, and you will know which areas you need to research on or which areas you need to learn on. Okay, so this is our part 2 version of changes in equity. My name is Ronald Kashweka. Thank you.